How will the Queensland flood disaster recently impact the property prices in the Queensland market in the short, medium and long term?
In terms of real damage, only 0.35% of the dwellings in Queensland have been affected. And if you include everything about, got some water in a yard or something, it's 1.7%. So not everything is flooded, not everything's been flattened up north. That's quite important to put that caveat on it because its impact is really to do with confidence rather than practicality in terms of the number of properties affected. And that's hard to turn around. We do think that in the short term its impact will be there, but maybe not as much as some are saying. I can't see falls of 35% or figures like that were actually quoted. Some people may opt to sell and they'll panic, and some have already done that, and they are seeing major cuts on their prices. But for those who stay, for those who go through this difficult process, you might see values come back 5 to 8% for a year or two and then slowly recover. Across the market, its impact is still there because of confidence, but over this year I think there'll virtually be no impact if you weren't flooded. So we're thinking values will come back this year across southeast Queensland at about 5 to 8%. We were predicting about 5% regardless of the flood anyway. Things are slowing down, there's a lot of stock for sale. Queensland needs to sort itself out in terms of population growth and so forth. So its impact's there. Unfortunately, lots to do with confidence. And on the ground, in reality, a lot of properties haven't been affected and it's business as usual.
Do you expect those who have been flood hit to return to the same areas or venture for higher ground?
What's happening to date is most people are staying put. Now, this is what happened in 74 as well. Different world in 74 because a lot of people didn't have the options, particularly financially, that they do now. So many people in 74 or post-74 flood stayed where they are, they rebuilt and so forth. I suspect that a large percentage either can't move this time around because they can't afford to, they don't have insurance or they don't have the money, even if they have insurance, to do so. So they will rebuild and stay. For those that can afford it, as shown in 74, there was a movement to higher ground. I suspect, as a guess, 1 in 10 will probably move and the remaining 90% will stay where they are. One, because they're forced to, because of money, but secondly, because they really want to live there, because this is where their community is.
Of the flood-affected areas, will it be the traditionally strong suburbs that bounce back in value faster?
I suspect what will happen is that the bounce back will depend on two things. One is what flood mitigation things are announced in the future regarding those suburbs. So if you look at a Fairfield, for argument's sake, which did flood substantially, in other words, a large percentage of the suburb was flooded, there is an issue with a creek. If they put a levee bank there, then its recovery, perception-wise at least, will be stronger than if they didn't. So if they mitigate a certain way, Rosalie, if they actually have a system to block the drainage, stormwater drains from flooding upwards, and they implement that, that suburb probably will bounce back quite quickly. Now, I've deliberately mentioned Fairfield and Rosalie because they are two key suburbs with lots of infrastructure in them and around them and a real feeling of place. They've got high streets, they've got a buzz about them. If you're a couple of suburbs removed from that, then they'll probably take longer to recover because, one, they don't have the infrastructure and they don't have the brand name, they're just a suburb. So I think a real key thing is which suburbs bounce back as, one, how well they're known, or you're calling them strong suburbs, but secondly is what mitigation's done where. Brisbane's going to flood again, maybe not to the extent we've seen this time, but it's likely to flood again and some suburbs will be affected again. It really depends on what mitigation is done.
What should buyers chasing bargain prices in these affected areas carefully consider?
I think, one, you've got to consider what price you're paying. And there is going to be some vendors who will sell, and they will sell for something at 20, 30% less. If you can buy a property at that range, I think it's probably worthwhile doing so, even though it may flood in the future. The second thing you need to look at is, can you rebuild? And I mean that as you'll probably be able to rebuild the same type of house, but if you're astute, you may want to actually improve what's there. So if you can get it the right price and then know that you can rebuild to a new code, in inverted commas, then buying such may be very good for the long term. Again, a lot of places that flooded are desired from a rentability point of view, and they are in pretty good locations. So one would think that once that's done, in concert with mitigation of some form, those properties would actually, in due course, gain value again, like they did in '74.
What will the construction boom as a result of the flood disaster mean for properties in those areas?
I actually don't think there'll be a massive rebuild in housing. Most of the things that need to be rebuilt involve plaster, carpentry, plumbing, electrical. Those trades, particularly in Queensland, southeast Queensland, were actually had a lot of spare capacity. In other words, they weren't doing much prior to the flood. Unemployment in the construction industry is quite high in Queensland, well at least it was. I think something like 2,800 people have lost work in the last 12 months in the construction industry, and a lot of those were those what we call finishing trades. And so there is a looseness in that market. So the boom in construction will be, I think, limited, one, because the trades are not at capacity, so the price escalation won't be high. And secondly is that a lot of properties won't get rebuilt anytime soon. It's hard to know how many got insurance and how many don't. I would guess that probably only about half the properties are adequately insured. And so the rebuild is going to not be as strong as I think a lot of people think. Smarter people than myself estimate a 3 to 4% increase in building costs because of the flood, and that's going to have not as much impact as many people think. I think what will happen as a consequence of building or not building is that you'll see a lot less unit developments and other type projects in and around the Brisbane River not happen as fast as they were planned. And in a year or three, and it's that broad, it's hard to say within the certain month, but in a year or three you'll see a real undersupply of new stock being built in the Brisbane region, Ipswich region, and that will actually then lift values and lift construction prices at that stage. So its impact I don't think is going to be bang. I think it's going to be more like that when it comes to construction.
What impact will the floods have on developments and infrastructure in the area?
I do think it will slow development. It will slow development, one, because the banks won't necessarily lend at the same ratio that they would have before. Secondly, demand is going to be weaker in a flood-affected suburb than it once was. One, you might not be able to get mortgage insurance, and therefore you won't be able to get a loan if you're an investor or an owner-occupier for that property. So you're going to see, I think, less construction, and even projects that are currently for sale and have been for sale for some time and haven't started construction yet probably won't happen in the time frame, probably about a third to a half of what was planned to happen in terms of new construction of residential dwellings in and around these flooded areas are likely not to happen in the planned time that they were. That in due course will influence supply and then will influence price, rent and so forth. Infrastructure projects will change, and they already have been, to priority of fixing up the flood. So a good example is the Brisbane Cross Rail project, which is one that I think really should happen, and it shouldn't be delayed. It should start straight away because it's a real capacity of Brisbane to handle more train service, but that's going to be delayed. I think they've said 2 years. I wouldn't be surprised if that's actually a lot more than that, particularly if you look at what may happen in the world in terms of commodity prices and demand, and the state government coffers and the federal government's coffers in terms of money coming in. So the delaying of certain infrastructure is going to be, or the changing of priority may be good if you're in a flooded area, and I could understand why you would want that to happen, but it may not be good for the overall city because certain things I think need to happen to alleviate many of the problems facing the southeast corner, which is traffic congestion and so forth. So there's going to be a change, and the projects that are announced infrastructure projects change now, they may change in another 6 to 12 months as well. So it's a shifting target, and it's hard to really know what's in and out. And I think people should try and monitor that, particularly when they're going to invest, because you want to invest in areas there where infrastructure is improving, and you want to know the time frame of those infrastructure improvements.
Do you think all natural disasters like cyclones, floods and fires similarly impact the property market?
The flood is, particularly the flood Brisbane had, was one that it was something that was slow. People had warning. They could remove, a lot of people didn't, but they could remove their belongings and then they could re-enter in a matter of days. Fire is a bit different. And I think that the impact of fire, particularly in an area like Kings Lake and so forth in Victoria, the local feeling is still quite negative. And it looks, it scars because the trees still haven't grown back, and a lot of the houses haven't been rebuilt, and so they've lost houses. I think the flood, whilst is not great for those people who went through it, it's nowhere near as severe an impact in terms of emotion and then confidence and therefore value and sales rates than a fire is. And an earthquake's probably even worse than that, because when's the next one going to happen? So I do think the answer to that question is broadly what damage is done and what it looks like. And in an increasingly fragile world where confidence and sentiment still is being influenced now by perception, and the more tragic a natural disaster like a fire and earthquake, I think the more it's going to perceive the value.